Welcome back to the show, everybody. We got a really good one for you today. Even though the crypto space collectively is just under $1 trillion right now, and XRP ringing in right at 27 cents, we should keep our eye on the ball because we're going to look at a ton of evidence that shows us the entire crypto space is unfolding in an amazing way for every one of us right before our eyes. And by the way, we've got some hot comments from Brian Brooks just off the press here. We're going to play those for you too. Let's roll that beautiful intro.
This is Digital Perspectives with Brad Kimes. Subscribe for new content notifications. Now, here's Brad Kimes. Come on in.
Welcome back to the show, everybody. You can follow me on Twitter at BackupBradley above at the top of the screen and everything that we're talking about here today. Okay, let's go ahead and take a look at it. 985 billion plus fell just under $1 trillion from this morning, and XRP ringing right in at about 27 cents, and we're down 12.12% on a 7-day. So don't forget, we'll take a look at it when it's bad, just like we'll take a look at it when it's good. But let's go ahead and get through this news. A couple things really quick. First off, I know a lot of people like to do trading, yield farming, investing, scalp trading. And if you're one of those people, you want to check out Bitrue, offering more great opportunities with up to 70% APY Bitrue yield farming, PRT, and BTR investments. So make sure you check that out. And by the way, if you go to my Twitter and you retweet this post, I'm going to pick a winner that's going to win a little bit of XRP. So make sure you go there, retweet, and share that. Now, here's another piece of news for anyone that has an XRP wallet address on Bitrue. Listen very carefully. There will be an upgrade, and they are changing on January 22nd the XRP wallet addresses. And that's specifically for Bitrue. We will be performing significant upgrades to our XRP wallet, on Friday, January 22nd, 6 UTC time, which will increase security, stability of our services. Withdrawals and deposits for XRP will temporarily be offline for a few hours while the upgrades are being deployed. It says here, when the upgrades have been completed, your XRP wallet address will have changed. Listen to this part. Any coins that are sent to your old address after this point will become irretrievable. If you have the old address currently saved or whitelisted in outside locations, then we urge you to update these addresses the moment the upgrades have been completed. Please note that if you have that address somewhere, like just on the automated kind of setup to just receive and send to another exchange, you will need to fix that and change that. So, all right, that's the public service announcement for today. Let's take a look at this from Michael Val 5 Links. Shout out to you, my friend. Institutional investors dominate Grayscale's 900% annual gains in 2020. Okay, now, but this post and this one go together. And tokenizing Tesla and Facebook, Google, and Apple stocks opens wholly new markets, much like the arrival of CFD brokers in traditional finance. What I wanted to point out about these two posts right here, institutional investors dominate and tokenizing Tesla, Facebook, Google, and Apple stocks? Oh, no. You were doing so well. Tokenizing the entire market. It's not just Facebook. It's not just Tesla. It's not just Google and Apple. Oh, no. What we're talking about is the institutional money that we're clearly seeing sneak through the back door here at Grayscale. And we understand that it's not just about tokenizing the blue ribbon or blue tech stocks or top stocks that are out here. The entire conventional markets are being tokenized, whether we're talking about real estate or we're talking about stocks. Let's go ahead and get that straight, because that's what's going on there. Here we see how we're going to be able to legitimize the on and off ramp so we can do these things that we just talked about. New regulations could push up US dollar stablecoins into the payments mainstream. You don't say. You don't say. You know, This is something to note. I stressed this on the last couple videos I've done. I'm going to stress it again. I brought up a diagram. You know, the Tether case and Bitfinex and the $1.4 trillion lawsuit is a problem. And it can be very crippling to this entire crypto space, not just Bitcoin. But yes, obviously, it can do quite a bit of damage to Bitcoin. Without going back into all of that, and I encourage you to watch the morning video because I did a nice diagram to go along with it as well to explain what the potential crippling effect of losing Tether could be, and rightfully so if the things are accurate in the lawsuit against Tether. So, you know, there's that to note as well. But nevertheless, what it looks like to me in the macro sense is that they're ripping out the USD Tether, and that's all but gone at this point, and that's got to go, and they're going to introduce the USDC, right, that we see here with Jeremy Allaire, and the Pax coin, and say, now these are stable coins you can trust. In fact, this is that public-private relationship we've heard the Fed talk about when it comes to having a digital dollar, and why the Fed feels like they can wait for years. They can wait for years because they already know they are the global reserve status. That's what the US dollar is. So they already have that on lock. So at this point, they could use the private relationship with the public sector there and begin to have stable coins represented in a much more legitimate fashion where they're really accountable and you don't have what they claim is going on with Tether. Now, we will see how that unfolds. It does not look good. The other thing to remember is that's not a market regulator suing Tether and Bitfinex. It's the federal government. It's different. It's a little different, right? They got RICO acts hung up on that. So understanding that, why is this important? It's important because you got to have consumer confidence, investor confidence, and investor protection, and in consumer protection, right? That's what has to be here for this new digital space to happen. How are people going to get into the new digital space to go get Bitcoin or Ether or XRP or whatever it is they choose to get? Well, they're going to have to convert to a stable coin in most cases. So the reality is that this is huge to me, that I see them really going after Tether in this manner, and knowing that if they get Tether, I would expect a huge downturn across the whole market for at least for a short period of time. And then to see coming out of that, the introduction of a wider spread use of the USDC and maybe the Pax coin. So something to note. But what I do know is it makes you think of, where did all of this even begin? This whole legitimizing the markets and getting this stuff together and new financial system. It started with the Fed. Yeah. And we were just talking about the public-private relationship with the stable coin and the digital dollar and how it could be a private company representing it, but with more accountability, obviously, right? Certainly not a situation where you would be using the coin that people are buying with your fake money and using that as a reserve. Now that dog don't hunt. And I think you're about to see that story play out. But the reality here is it starts right here. And it ties very much in with the Federal Reserve Faster Payments Task Force and what Ripple has been, what I really refer to as commissioned to do. Because even though they sought out to do this as a company, I get that, but they quickly aligned themselves with something like the Federal Reserve Faster Payments Task Force back in 2017. And they were the cited solution there. Now, coming here, this is just out from yesterday, it was. Listen to this quick clip. You've heard it before, I'm sure, but if you have, stay with me. We're going somewhere here. Listen to what he says. This is obviously Fed Chair Jerome Powell talking about global stable coins, the idea of how they could very quickly become systemically important overnight.
Been very focused, as you know, on better regulatory answers for potential global stablecoins in particular. So that's been a high-level focus, and that will continue to be a high-level focus because they could become systemically important overnight.
There it is right there. I have made it very clear that I believe XRP could either be a global stablecoin or it could be a stablecoin launched off of XRP, the asset, which may be the actual road it goes. We certainly know that David Schwartz has told us that you can issue a stable coin off of the ledger and assets that are collateralized on the ledger, as well as XRP itself. So that question continues, but I certainly believe we're headed somewhere like that. And when he said systemically important overnight, just listen to this again one more time here.
For potential global stablecoins in particular. So that's been a high-level focus, and that will continue to be a high-level focus because they could become systemically important overnight.
There it is. And again, to remind you, Dodd-Frank in the U.S. Treasury website here talks about how financial market utilities can be systemically important and deemed systemically important by FSOC, the Financial Stability Oversight Council, and the Fed, by the way, has the ability to do that as well. So that is a pretty interesting thing. And just a note, clearinghouses have been an example of entities that have been deemed systemically important through the Dodd-Frank Act. And it's interesting enough that XRP is really set up and designed to settle back in for like clearinghouses and things of that nature, wholesale market for central banks. You know the drill, right? So here we have the work that I believe he was citing from the Financial Stability Board that we've covered heavily here about global stable coins. And what do we know about XRP beyond the US? Well, we know that the Treasury in the UK has said that exchange tokens are really like Bitcoin, Ether, and XRP. So it's an exchange token in the UK. We don't have an issue about what it may or may not be here in the way of it being a security. How about the IMF? The IMF released a document about macroeconomic statistics on crypto assets. And if we move to that last page in there, it says here, down here, you could see utility tokens, which is much like an exchange token. And it says trade credit and advances debt securities. Well, that to me lines up pretty damn nicely, I have to say. So the IMF certainly laying in that same close area. They don't cite XRP, but you could certainly see that. I don't think it's a thin limb to stand on that XRP is obviously a convertible virtual currency. That's its whole design, right? So then looking here, we see some initiatives. This is from another BIS, which is a central bank of central banks, showing us here there's some initiatives such as the development of ISO 20022, aim to achieve this. However, although international standards can enhance efficiency and interoperability, their full benefits can be reaped if they are interpreted and implemented differently across jurisdictions. The move to the ISO 20022 standard, which is the de facto global data standard for modern payments. What's interesting about that? Well, this company that's in the middle of a lawsuit with the SEC that claims they have an unregistered security is also a part of the standard body and committee that is now the first member focused on distributed ledger technology. And by the way, Japan is testing XRP in a $6.6 trillion FX currency market for settlement. You know, the World Economic Forum has cited last January crypto assets designed for intra-bank payments and settlement, JPM coin and XRP. We know internationally and around the world what the deal is. They don't have a problem how they see this. I think it all comes back to exactly what Jerome Powell said. We have to be very careful because once we do this with a global stable coin, it can become systemically important overnight. Here's a reminder from I Am Legion. Shout out to you. This is Monica Long and Michelle Bond. That's right. And let's take a listen really quickly here. And I remember when this came out, and this is what they just blurted out real quick one day on their YouTube channel.
We are engaging with 50 different governments worldwide.
Engaging with 50 different governments worldwide with an unregistered security, mind you, right? So now let's keep this going here. We have a couple minutes here from Brian Brooks today from a recent interview at Ask Me Anything as he's on his way out there at the OCC. And he makes some really, really great comments. Let's listen to this right here. And shout out to Bank XRP for these clips.
And I think the recognition we've had in my time at the OCC is crypto is banking. It's not that banks are okay, trading Bitcoin. It's that Bitcoin and ETH and stablecoins, they are banks. Blockchains fundamentally are banking because what they're doing is allowing the transaction of value across networks, which is what banking has done for 500 years. They're doing it in an orthogonally different way, but that's what banking's about. And so when you see us, for example, as we will do soon, start chartering as banks, companies that are crypto companies, you'll start to understand that we're not necessarily trying to make it so that big banks can dominate the crypto market. We're trying to tell crypto participants that a bank charter might be the right form for you to do what you're doing. And there's a lot to unpack there, but I think that's the vision.
Pretty powerful remarks from him. One, that the actual payment networks themselves are banks and the blockchains themselves. And two, that he's really leaning in to say to the crypto companies, come get a banking charter. One has to say, we're like, look, I've asked this many a time here on the channel, will we see Ripple apply for a banking license, a banking charter? They have their own stash of XRP. They have it in an escrow. They release it in a very controlled way, decide how much stays out, how much goes on the back end. One thing is for sure to me is that, the escrow is locked up cryptographically. I get all of that, and it's on a schedule and blah, blah, blah. Nobody can change it. All right, I got all of that. Who's it released to? Every month. Who's it released to? They're 1 billion every month release, right? So it's released to Ripple. So that's the issue. And if you're not really a bank, even though you're acting like one, that's a problem, because we heard Sandy O'Connor talk the other day about what happens to entities when they act like banks and then trouble comes financially and they aren't banks. You end up being the AIGs and the Lehman Brothers and the Bear Stearns of the world, and you don't get bailed out. They're not going to let that happen again. Let's listen to this next exchange down here from Brian Brooks as well. Let's listen to this really quickly.
Banks can connect as nodes on blockchains for the purpose of supporting and transacting payments. So if you think about it, the networks that are transacting these stablecoins are not their own separate networks. They tend to be the Ethereum network or the Algo network, or there are a number of other networks that some of these interoperable stablecoins are now able to connect to. And what we're saying is, hey, a bank can be, a staker on the Ethereum network. And in doing so, will then be able to transact and validate transactions that are, creating Ethereum tokens for them as a validator, while maintaining the network that is the network that stablecoins transact on. So it's a much more fundamental letter than just talking about stablecoins. But the point of that is to say, listen, we've already got banks that are maintaining payment networks. Think about the big banks that are part of the automated clearinghouse system. That's a small number of banks versus the Ethereum blockchain is maintained by millions of nodes. But still, it's long established that banks can get together, they can create payment networks and use that to transact payments across the system. All we're saying is the big bank oligopoly, which is what that network is, or the government monopoly, which is what Fedwire is, are not the only ways that banks can transact value, right? The role banks have is not to be oligopolists. The role banks have is to allow their customers to transact value with other people. And if one way of doing that in a much more interoperable way is using blockchains, because again, blockchains are just, internet protocols, then we're happy to tell banks they can do that. So that's the big deal here, is it gives banks a role as nodes on networks and says you can not only use the bank monopoly networks, you can use the open networks to send value. Now, that will open up a world. Remember, just a moment ago, I was talking about imagine a world where nobody ever has to download into or downshift into fiat. It will open up a world where you will have people who have investment assets in cryptocurrencies, and when they're ready to make a payment, they will shift some of that into a stable coin, and their bank can transact the stable coin without ever leaving blockchain. And everything can happen inside of the network without
Everything can happen with inside the network. I showed you this while he was talking, and he was mentioning Ethereum's network and the ERC20 token, and that's great. And I think you'll see that to some extent too. But one thing I do know, with recent fees for smart contracts being around $17 per Ethereum, you're not going to feel so smart not too long from now using that network. So what I would lean into as a replacement for what Brian Brooks is hitting here is the World Economic Forum and what they're citing for wholesale back-end settlement on what would be a private network that the central banking system would use, built on top of an open source technology like the XRP ledger that Brad Garlinghouse has told us central banks have approached them about using. Now, when you go through all of this, you really have to start to say to yourself, boy, this is pretty good where we're headed. And, if history repeats itself, for Raz tells us, the fibs tell us XRP, the Fibonacci tells us the XRP will hit either $25 or $41. These are based on previous bull run fib levels hit at the peak of the bull run 2017, looking at the 1.6 and the 2.6 proof attached. And I'll go into these here just to show you. Here is the December 2017, and it shows you the spike up around the 2.6 between the 1.6 there. And another example of that also here is May 2017, showing you the chart here slightly before. And here is the chart here showing where we are now, and the fibs pulled off of that, and between the 1.6 and the 2.6 zone right in here would be anywhere between $25 to $41 XRP. Now, I have to say, when I think about these things, I come back to the idea notion that crypto gets the clarity it needs. And we're going to see the adoption of blockchains all around the world. And I think it could get pretty expansive pretty quickly. And then we're going to have that same problem that we have right now today in the fiat world, because not all of these payment networks a la blockchains or DLT systems are interoperable the way that XRP is. And hence, that becomes the biggest use case in the world to really bring all these individual layers together to act as one federated unit or one federated system. And I think that's where we're going. And if we get the clarity we need not too long from now, it wouldn't be hard for me to imagine a $25 to $41 XRP either. That's going to do it for me. Make sure you hit the like and subscribe and leave a comment below. Share with somebody you know. Make sure you hit that notification bell so you don't miss a thing. Hit the like and subscribe, and always check out the, I already said this, excuse me. Make sure you hit the, check out the links in the description box and the comment section. They're trusted, vetted links of products and services that I use each and every day. There might be something in there for you. So I will catch you on the next one.